Hi, this is Dave with the weekly market recap video commentary. We're closing out the week for Friday, September the 21st, 2012. I'm recording this video on Sunday, September the 23rd. And interesting, boring week. Closing out this week. Let's start out as we always do with the stock indices. And this chart's looking pretty busy. So what I'd like to do is, this is just a continuous chart. I'm going to re-chart this using the current contract. Let me just, IMZ12. Okay, so now what we have here is a brand new kind of clean chart of the Dow futures, and we're looking at the daily chart here of the YM or the Dow future, and what you can see here is we still seem to be maintaining the uptrend in the Dow, but it's kind of stalled out in and around some of these levels. So last week what we were looking at was, I'm just going to look at the market from a technical perspective. So what I'm going to do is I'm going to recreate some of the technical studies that I usually leave on the chart every week, and just so that people can kind of get an idea of what I'm looking at. So for example, when I'm looking at this market, what I can see is here we're in an uptrend. I'm going to redraw this trend line here. You can see the uptrend, and you can sort of see a channel forming. So I'm just going to draw a new parallel at the same angle. You can sort of see this sort of loose trend or this loose channel forming between here and here. So I would probably look at this, and then I would draw a new parallel here and look at these highs here. They're both sort of in play, but this one seems to be a little bit more prominent. So then we were talking about also this sort of cup pattern here that we've been looking at for for the last couple of weeks, where we formed a cup here, and then we had the handle form here, and we were looking sort of for a breakout of this handle level here. So when I look at these kind of cup with handle patterns here, which Investors Business Daily made really William O'Neill's market studies, he made that really sort of famous, the cup with handle pattern, something that he talked about a lot in his books. So when I see these kind of patterns forming, what I do is I'm just going to grab the fib extension tool here. It acts as a retracement and an extension tool. So I'm going to grab the relevant highs and the relevant lows. So this is the relevant high, and here's the relevant low in play, the major high and the major low. So when we look at this, here's our 100%, here's our 0%, and we have a 1272 extension and a 1618 extension in play. So if we really analyze this, what we can see is we broke above these highs, right? And then we, came and we pulled back down to this trend line, and we found support at this dynamic trend line level, and at this 21 exponential moving average level, sort of in this area. And now we pushed above these highs right into this 1272 extension area of this major high to this major low. So I hope that makes sense. If you have any questions, feel free to email me through the meetup group to ask me about this. We'll be covering this in an upcoming meetup this Sunday, September the 30th, covering fib extensions and retracements. So this is one of the topics that we'll specifically be covering. So what I'm looking at here is I'm looking at a potential target based on fib analysis somewhere up and around, these levels up here around 14,000 from a technical perspective. And if you look at this kind of analysis here, usually, like, this is just based on my experience watching the Dow, usually when you kind of push up and you make a new swing high, which this is a new high in the Dow, and here's the intermediate low, here's the intermediate high. Usually what happens is, like, if you go back in time and you look at, like, for example, this level, usually what happens is you get a pullback down into support. Same here, you consolidate for a couple of days, you get really tight, kind of doji action where, you're not really expanding the range on the day significantly, and you get a pullback back into support. So you can see that happen, numerous times here. Numerous times. This is just based on observation. You get this kind of action, you pull back. You get this kind of action, you pull back. So at this point in time, we've been consolidating for 1, 2, 3, 4, 5, 6, basically all last week. It was a pretty boring week. We've been consolidating there right at this 1272 extension of this, move from the major high to the low. So at this point in time, what I'm really expecting to have happen is some sort of a pullback back into support. Barring any kind of crazy news coming out. We already had the news out last Thursday, which I think was this day here, which caused a really big move in the market based on, quantitative easing, stimulus coming out of the United States Federal Reserve, with, Chairman Bernanke coming out and saying that that they are going to basically buy $40 billion worth of bonds and mortgage-backed securities, every month. So looking at this from a technical perspective, though, when you get a lot of consolidation like this, typically what I'm looking for then, just a quick reminder, this video is for educational purposes only, looking at technical analysis aspects of different markets. It is not meant as trading advice or advice of any kind, strictly educational purposes. So I'm sorry I have to keep repeating that in each of my videos, but looking at this from a technical perspective then with that understanding, you get a consolidation in here. So what I'm basically looking for is a pullback back down into support, either at the 21 exponential moving average, here, the 21 EMA, or somewhere in, you can see from a technical perspective, these previous highs will act as support. This 21 exponential moving average will act as dynamic support, and this trend line at this point in time, this trend line is acting as support as well. So you have an area, kind of a zone in here of support, not a specific level, but a kind of a zone of support where, these levels kind of come together. So right now the trend line is coming together with this previous swing high really nicely. You can see we broke above this. And so a pullback back down into this level, or this zone would make a lot of sense to me at this point in time, because we've been kind of consolidating here and we don't look like we're really pushing higher at this point in time. So that's sort of what I'd be expecting. That's what I'd be expecting. So even though I'm bullish on the market, with this consolidation, I wouldn't be surprised to see a pretty quick pullback back down into this level, somewhere in this zone. I hope that makes sense. And then what I'd be looking for is, I'd be looking to see if, this is the major trend line in my opinion, and we've tested it here. So here's the low, right? Here's the low. And then we're looking at, maybe 1 or 2, depending on how you count this, 3 tests. We're starting to get a little bit long into the along into this trend, and no trend persists forever. So basically what I'd be looking at is, if we get a pullback down into some of these levels, I'd be looking to see if this level is going to hold, push off, and look to put in a new swing high potentially into some of these levels, or if it's going to hit this level and fail, right? So what I'd like to see here, to see the trend continue, would be a pullback into this level, and for it to hold and then push off to new highs. But I'm also cognizant of the fact that, we've been trending for a while here. This was the easy target in terms of a breakout extension. This is more of a harder target to reach, even though I am still net bullish on the market. We really need to hold these levels in and around here at 13,121-ish, 13,100. We also have a key level of 13,200, which was the major support, the major resistance rather, of the breakout of this move. So you've got, 13,200 as the key support level, and usually knowing that just based on analysis, what I would do is I would just draw a horizontal line and leave it on my chart there. So here would be, let's say, the major at that time was the major resistance. Resistance once broken becomes support. So what I'd be doing is I'd be looking at putting that on my chart at 13,200 roughly. So here's how I developed some of these levels. I was watching that level. You can see there, that's that swing high there. So a pullback down into, somewhere in and around these key levels, this key zone, I think is in the cards. That's sort of how I developed that analysis. You can also see that we're at, the top of this channel here, this trend channel here. And, even if we hold this level and we push up, that the top of this trend channel brings us right in and around those levels. So I like to see confluence in and around those levels where these things kind of come together, like you've got this swing high, you've got this key level, you've got this trend line. These areas tend to be magnets. These areas of confluence in the market where more than one level comes together, they tend to be magnets. They tend to be stronger, more important levels. So I'm always usually, typically looking for those levels of confluence where, multiple people may be, looking to react at these levels. They're sort of a self-fulfilling prophecy. We can only measure the market through, fundamentals or technicals, and by, having various players look at certain levels and react at certain levels, that's kind of how we as humans interpret the market, and we tend to make decisions or react at those levels, and they tend to become, areas of self-fulfilling prophecy, or, where a lot of different people are looking at those levels. Like you might have people that are predominantly fib players. You might have people that are predominantly, looking at moving averages. So where you see those levels kind of come together, they tend to be stronger levels. So that's what we call confluence. And so just kind of get. I apologize. I just paused the video there. I hope I didn't cut off too much, but just getting back to the analysis here, we were just talking about confluence and the importance, of confluence where major levels come together. So getting back to this analysis here, we have a couple of key levels in play, and another data point that we might be looking at would be, as we mentioned, this key Fibonacci extension level, resistance, potential targets, these key levels as potential support down in these zones. So what we're looking at this point in time is a potential, pullback. So we have support, the major support levels being 13,200. We also have, if we flush down into this level down around 13,000, you have a key round number, which would be now round number support because you're trading in and around that level. So even if we broke this trend line, and all of these, zones, and we kind of plunged or pushed really hard into this level, I'd be looking at this as the major level, and any level above 13,000 in the market, I'm bullish. When and if we break 13,000 in the market, then I would be, if we broke this decisively, this 13,000 level, then I would start to become bearish on the market, and I would not, here's my line in the sand at this point in time. Between here on this side, I'm bearish. I'm a bear on this side, and on this side of 13,000, I'm a bull. So that's basically my line in the sand right now between my perception if I'm bullish or bearish in the market. It's a major swing low point, and it is also a major key round number support level at this point in time. So that's kind of what I'm looking at for the Dow. I appreciate you listening through this long analysis here, but I wanted to focus more on some of the technical aspects of the markets and what I'm kind of looking at to, sort of share some ideas with the group going forward. So let's take a look at the sister indices and see if we have, alignment between some of these markets. So let's take a look then at the S&P futures. So the S&P futures are looking pretty much the same. You have this area of consolidation. It would make sense to pull back down into some of these support levels here at the swing point, at the 100% level, which was the major breakout level, or, somewhere in this zone where you get, a trend line, meeting the 21 exponential moving average, somewhere in this zone. So it's a pretty wide zone, but that's kind of what I'm looking at, a pullback as well on this market, back down into support. Looks very much like the Dow. These markets are all kind of moving in lockstep. So that was the S&P futures on the daily chart. Also want to look at the NASDAQ futures to see if, the story looks the same. Looks very much the same. You have that 1272 extension that we basically pegged. We didn't quite hit it, but, that is really good enough. And you can see here, we closed really really low off the highs of this bar. And that is a sign of, potential distribution. So this is something that Rob Hoffman talks about a lot in his trading room. Just want to give a shout out to Rob. I heard that he won the traders competition in France. I think he booked about $4,000 of profit, and he was ahead of all the other traders in that competition, 3-to-1 basis. So congratulations to Rob. Happy to see that you're kind of doing your thing and winning competition. So congratulations on that. Very good. So just getting back into the analysis here. We've hit this 1272 extension, and I would expect some kind of a pullback, at least down into somewhere in and around the 21 exponential moving average, this breakout level, which was a previous swing point high, that we broke through. The trend line is very extended from the trend line. Are we going to get a 50% retracement of this major move? At this point in time, that would be a long shot, but I mean, anything's possible in this crazy market. So a move all the way back down into this trend line would be a pretty good extension down and bring you, in and around this 50% retracement. So I'm aware of those levels, but I think that at this point in time, it's a little bit. I'm not really expecting that deep of a pullback, but as I said, anything can happen. So let's take a look then at the transports from a Dow theory perspective. We've already looked at the Dow and the sister indices. Let's take a look at the transports. So here we've got a bit of a divergence happening, which is, I wasn't really expecting this. I actually haven't looked at this since last week. Here's a bit of a red flag here where you've got, this wedge. We started breaking out of the top of the wedge, and now we're breaking out of the bottom of the wedge. So here's a potential red flag in the market, and I don't really like that. I'm going to keep my eye on that and look to see if any major pullbacks fail some of those key levels now that I've had a look at this. This is kind of new data. I'd be looking to see those pullbacks in the other indices now. If they do pull back, if they're going to hold support, let's just go back to the YMZ12. That's the current contract month. So now I'd be looking to see if any of these pullbacks down into these levels that we discussed earlier, if they're going to be met with support or if they're going to be met with major selling. So these are, we have to be careful here on any pullbacks now. To make sure that the trend is going to remain intact, or if they're going to break some really key support levels, like for example Dow 13,000. Need to see like the structure, this market structure right now is we're higher highs, higher lows, we're trending higher, we're within this up channel. So until that situation changes, then we're still, bullish on the market. So, just a cautionary, sign there. Let's now take a look at, some currencies. And by some currencies, I really just mean, the euro. Let's take a look at the euro, which moves, tends to move inverse the US dollar, and see what's going on here. Now we've been looking at this, some of the breaks of these downtrend lines here, and we broke above here, and the market structure changed from negative to positive rather. So now what we have in play here is We have a potentially bullish structure in place on the euro, but if you notice, there are a couple of key things here. If we look at here, in my opinion, here is the major high and here is the major low. So that's kind of how I'm looking at this market. Major high, we'll just give it a little M, major high, major low. And you can see here we broke this downtrend here and we came back down, we tested the trend line, we held, and then we started putting in a structure of higher highs and higher lows here. So you can see here's a higher high. It's not very good writing, but here's a higher low. Here, higher high, higher low, higher high, minor higher low, and now we kind of have gone parabolic from here. So this move here, I think, was precipitated by the the Federal Reserve and the quantitative easing measures that have been put into play in the market. That has affected all of the major markets, and you can see the result of that. Now, this $1.30 level was a key level that we were looking at on the weekly charts, but you can also see it on the daily chart where here it was support, 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 and support once broken becomes resistance. So you can see when we broke the support level here, we kind of didn't look back for a long time. We broke this level, and then we started a pretty decent downtrend of over 500, about 500 ticks lower in the Dow, or 500 pips. I'm sorry, 1,000. It's more, geez, I can't even count today. We basically went from $1.30 to $1.20, so that would be like 1,000 ticks in the futures market, or 1,000 pips in the forex market. Right now, what we're looking at is the euro futures. The euro futures that trade on the CME, on the Chicago Mercantile Exchange. So, but it basically tracks the euro USD cross in the forex market. Those instruments move together. Or if you're looking at ETFs, you can look at the FXE, which tracks. All of these instruments track each other pretty closely. So I like to look at futures. I think they chart really cleanly. So that's what I'm looking at. So that said, getting back into the analysis now, what you have is this kind of bigger trend line. This trend line was broken. This trend line was broken. And, we were looking at the $1.30 level to potentially be tested. From a fib analysis perspective, we broke above the 61.8% retracement at about $1.28. So $1.28 to me, you can see where these levels come together, the 618, this trend line, and now you have a 21 exponential moving average there. So you have, again, what we were talking about earlier, you have confluence. I'm not going to write out the full word. Yeah, I will, just so that I can prove I can spell it. So you have confluence, that's a C. I'm writing with a mouse here. You have confluence in and around these levels here. So what I'm looking at here is a potential pullback into support, just as you've had in the other markets. So this is the major support level. This is, to me, the kind of line in the sand between long and short in the euro right now. So you can see we probed up above this key $1.30 resistance level. This was a major resistance level. In fact, I'm surprised we broke through it so cleanly and we didn't pull back when it hit the $1.30. But now what you can see is we pulled above it, sure, but now we're right back and we closed right in and around the $1.30 level. So you can see here, I think the euro futures closed at right at $1.30.001, okay? So that is a major level. You can see we cleared it. We cleared it, but now we've closed right at it. So now what I'd be looking at is for the market to either hold this level, and if it doesn't hold this level, to pull back down into this next major level around here, $1.28-ish. So that's kind of what I'm looking at. And even though we've changed from a bullish to bearish structure, this is a pretty key level, and I don't see us really taking off from this level too quickly. I think we've been really kind of long into this kind of parabolic move here, and we're sort of due for a pullback, right? So that's kind of how I'm looking at the market. I'm not looking for a lot of upside at this point in time. I'm looking more for, for it to put in a higher low kind of structure, or for there to be some kind of a pullback. So here I think is the key levels where the confluence is coming together in the euro. Now we've kind of put in a sort of bullish structure here with my trending indicator, and I should probably change this to green to denote more of a bullish structure. So we've put in a bit of a, a bullish structure here where we've had a change in trend basically as denoted by Fibonacci analysis, a breaking of this zone, as denoted by my trending indicator, and as denoted by, the breaking of some key levels here and the trend lines. So now if we kind of take a look at a couple of other data points, you've got this sort of uptrend in play here, right? You've got this sort of uptrend in play here, and then we went from that sort of normal 45-degree action, which I like to see in trending. I like to see about a 45-degree angle of ascent in a trend. Then you can see we've gone from that kind of angle of ascent to this sort of parabolic angle of ascent here. So if we looked at a pullback, let's see, from right about there, a pullback down to this level would kind of bring us in and around. Let me just draw that green, make it a little bit thicker. Okay, you can sort of see that those levels would kind of come together. Let me just zoom in so it's a little bit easier to see. So you can sort of see now in the euro, like you've got these levels kind of coming together in and around here. I'm going to extend this out a little bit, and hopefully I haven't changed the the angle here, but you can see these levels all kind of confluing. That's not really a word, but you can see these levels all kind of coming together right in around here. So typically you'd want to see, for a bullish structure to stay in place, for it to hold that 61.8% retracement. So I wouldn't be surprised to see a quick flush in and into these levels, or even, into, these levels, as long as you can see, the 50% retracement is coming in right around this trend line. So, and right around, these swing highs, this swing high, you've got some real areas of support coming in there. So to see a move into these levels, either into here or into here wouldn't surprise me at all at this point in time. I think we've been pretty, long into that move. Now, I'm just going to take a look at one other data point, and then I'm going to wrap this video up. If you look at, I know we've got some fibs drawn from this high to this low, but now this to me looks like an intermediate, high, right? And we still have this major low in place, that significant low. So what I'm going to do is just take another Fibonacci analysis look, looking at a retracement from now this low to that high, and see where the 50% comes in. So a 50% retracement comes in and around somewhere down here. So if we had a pretty big sell-off in the euro and a 50% retracement of this low to this high, basically a halfway back sort of move, would bring us right into these levels here. So, that is potentially, that is a potential possibility. So those are sort of the key levels I'm looking at in the euro. Not really expecting much upside at this point in time. I'm looking for a little bit more of a pullback. What would negate that would be really a move above this swing high. If we broke above this swing high, then I'd be looking for it to put in, another swing high somewhere up in, above there somewhere. So, but at this point in time, what I'm really looking for is more of a major, this was a pullback here, but more of a major swing low, a low to be put in somewhere down and around these areas, and then potentially either hold that area and push up higher to put in another swing high, or if this trend is kind of coming to an end, for it to fail and break these trend lines and then kind of come back up, So that's sort of what I'm looking at. You can, I can sell myself on the market on both sides here, but I think, we're generally in the stock indices, we're generally more bullish than bearish. In the euro, I'm more bullish than bearish at this point in time, even though I recognize that this was, the major move down, and this is, kind of a major downtrend, minor uptrend kind of move. but we're above some key bullish levels. So as long as we're above those key bullish levels, I'll remain bullish until, that situation changes or reverses, in terms of the market structure and in terms of breaking of those key levels. So I know this video was a little bit longer, but I wanted to sort of give some insights into how I'm looking at some of these markets a little bit, just because we have, an educational meetup coming up next weekend on September the 30th. I hope you can all attend. We're also going to be attending a CSTA meeting on Wednesday the 26th at the Queen Elizabeth in Oakville. So I'll be sending out an announcement for all of that. And we're going to be having the president there of the CSTA speaking, Hap Snedden. So that should be really interesting. I think he's going to be focusing on cycles and outliers. So that should be a really interesting presentation by the president of the CSTA, Hap Snedden. And I'm looking forward to it. I will be there. Hope you can all make it on the 26th. I'll be sending out an announcement in case members of the meetup group want the details. I encourage you all to make it out there. It will be a good meeting. So I hope this video on the stock indices and the euro help, and I'll look forward to seeing you at one of the upcoming meetings and or at the next video update. Until then, good trading and be well.